Hello, Namaskar. You're watching BTTV. I'm Tanya Aneja and with me Shail Bhatnagar, our markets editor. Well, Indian markets continue to remain volatile. But what's really next for Indian markets and what should be your strategy? We will discuss this and much more. But first up, the top headlines for you. Indian stocks are likely to consolidate with a weak bias as negative cues from overseas prevent bulls from taking advantage of a 4-month low on the Nifty. High beta stocks, especially from the PSU pack, will remain traders' mainstay as they look for value and price action in a beaten down segment. Hello, very good morning, Shell. And it's a fresh week, it's a fresh Monday morning. But if we look at the last week performance, Sensex was down around 1,615 points last week and it settled at 63,783. Nifty also tanked around 495 points that week to 19,047 odd level. The good news is that 19,000 level is still intact, but it's a fresh week, it's a fresh Monday morning. I want to understand from you that how should we really approach markets at this point in time and what's really next for Nifty? I think we are not able to hear Shell, but we'll fix that technical glitch and we'll get him back on the show. But if you look at the last week performance only, Sensex was down 1,615 points and it ended at 63,782 level. The good news is that the market recovered on Friday. It was a good pullback, 1% uptick there on Sensex, and Nifty also was up around 1%, 19,047 was the level on Nifty. And Bank Nifty, if you see, that was also up around 1% to 42,782 odd level. And if you look at some of the gainers and the losers on Friday's trading session, among the gainers we had Coal India, that was the top gainer for you, then HCL Tech, and we had Axis Bank also on the back of stellar numbers. This bank has been performing really well after the second quarter numbers. We had Adani Enterprises, SBI. I think Shell is with us now. So Shell, over to you for the Nifty strategy for today.
Good morning, Tanya, once again, and a very warm welcome to thousands of viewers who've joined us from different parts of the world on Market Today at Business Today Television. Yes, we saw a downdraft all of last week, and you very rightly mentioned the points that the Nifty had lost about 1.2% all for the week. But the 190 point rally that we saw on Friday is perhaps an indication that the worst is actually behind us, and that the 4-month lows on the Nifty are likely to attract a lot of aggressive traders as well as buyers who want to take advantage of this 200 DMA range that the Nifty is trading at. And at June last week's low, 28th June, we had seen these kind of levels. This is what the index is at. So these are good levels to look at. And there was intense short covering that happened on the Nifty options chain at various levels. If you see all through 18,500, 600, 700, 18,900, 19,000 range. These were all shorts that were covered very aggressively by the bears, and the bulls had an upper hand. So if you look at tactically, we are at a, how should I say, 4.5 month low, and this is what is attracting a lot of bulls with deep pockets who booked money and are ready to enter at lower levels. But the issue, Tanya, is that the conflict in the Middle East, that's raging very strongly over the weekend, and that has pushed gold prices for the first time since May above $2,000 an ounce, and that's safe haven buying, and that's not a good sign for global equities. You've seen weakness coming in Asia. The Dow closed very sharply lower on Friday. In fact, if you look at the corrective rally on the Dow, it's now down 10% from its all-time high, as also is the Nasdaq. So we've entered a corrective phase in the US markets, and if we presume that the US markets are the global growth engine for both equities as well as economies, then I see a bit of a pain coming in from that trend. So tactically we are long, but strategically we seem to be in a zone where consolidation is likely to happen on the weak side. So that's how Nifty is, and we see a very strong resistance at 19,200 on the options chart, a very strong support at 19,000 and 18,900. The foreign funds, as you know, were huge sellers both on Friday as well as Thursday, somewhere to the tune of
and 1,500 crores on Friday. Tanya.
Okay, absolutely. And it's also now time for us to welcome our market guest on the show. We have with us Mr. Vineet Bolenchkar, who is the head of research at Ventura Securities. Very good morning, Mr. Bolenchkar, and always good to have you on BTTV. Let's start with your market outlook only. I mean, markets continue to remain volatile amid, escalating tensions in the Middle East. Then we have rising US bond yields as well. So I want to understand from you now that how should we really approach Indian markets at this point in time?
See, as you mentioned, the geopolitical concerns and the rising yields in the US are very discomforting for the market. And add to this, the price of gold movement, which is on the positive side, does not bode well for the equities. We believe that what happened last week on Friday, post the expiry, is a kind of a relief rally which is coming. I think it does not have too many legs. We should sell into it. Although the results that came in after that with Reliance and Maruti posting very strong numbers, it should aid the Nifty valuations. But we still believe that there's too much of flux in the market out there. And the US has moved an armada of 75 ships into the Mediterranean. So that is telling you the seriousness of with which they intend to uh, assist Israel, as well as protect further escalation in the situation out there. So that, to my mind, is a good sign. And the fringe players that are there, they've all been making a lot of noises about getting into the war, but none of them has today even accepted one single refugee from there, and they have not committed any troops on the ground.
A pleasure to host you on Business Today Television. How are you looking at quarterly earnings, and any pick that you would suggest our investors add at current levels?
So I think the earning season has been very strong and robust. It has been more or less in line with what we expected. And keeping all this in mind, I think one single large cap stock that stands out for me is going to be Maruti Industries. Uh, I think that the numbers that came out on Friday were very strong, and it is also portending that things should look better from here onwards for the company. So uh, we like Maruti a lot.
Okay, absolutely got that. And Mr. Bolenchkar, what are your thoughts on Reliance Industries? Because if you see, the company reported 30% YOY rise in its net profit at 19,878 odd crore rupees, and EBITDA also saw a healthy 30% growth, and EBITDA margins also jumped around 390 basis points to 17.5%. So what are your thoughts after the results, and what should be the strategy for Reliance Industries?
So I think the numbers are very good. If you see there, lot of factors which can trigger the upcycle in earnings has been struck. We've seen gas productions up about 35%. Grocery and fashion revenues are up 30 to 33%. The refining cycle looks to be very strong. Uh, Almost 70 plus million 5G subs are on the network. You know, debt has declined. So a lot of good things happening, and there is a sign that the capex intensity might slow down in the coming days. So given all these factors, I believe that its valuations are very very benign, and this stock warrants a re-rating, as we are expecting a lot of uh, issues around the geopolitical climax as they subside over a period of time, or it gets factored into the price. We expect Reliance to start outperforming the market.
At the moment, Reliance is available at 2265 rupees per share. And this is the lowest price that we've seen since 29th of March. So a 6-month low on the counter. And against the backdrop of the kind of earnings that Vineet has described, this looks good, at least if you form a SIP pattern in this particular stock. We'll get more feedback on technical charts of Reliance. But for the moment, let's take Vineet's view on Maruti. Of course, it's at a record high, Vineet. Apart from Maruti on the OEM space, is there any auto ancillary that is connected to Maruti that you find would probably give stellar returns, given the fact that the entire auto sector, whether it's Tata Motors, whether it's TVS, Bajaj Auto, to some extent, even Mahindra and Mahindra, are trading at record highs?
Yeah, so I think one stock that stands out for me is Talbros. We believe that that stock has done really well over a period of time, and we expect the stock to continue to do well. Valuations are not very rich. They have caught up in the recent past, but that has been the story with all the mid caps. So we like Talbros as a ancillary pick from current levels. Other stocks that we under our coverage that we like are Minda and Minda Corp. We believe that these two stocks have got significant earning potential, given the fact that they are traversed well between the ICE and the EV vehicles, and they're very agnostic to these two types of platforms.
Fine. Talbros is an automotive company based out of the Delhi NCR region. What they make is components which are used as far as the car engines are concerned. They make gaskets, heat shields, suspension system, anti-vibration products, and hoses which are used to connect your engine to different parts of the car. So that's Uno Minda, Talbros, and Maruti as an auto ecosystem that Vineet prefers. Mr. Bojrinkar, we've also seen a series of earnings coming out from the NBFC space led by Bajaj Finance, to some extent even Geo Financials as well. Anything in that space that catches your eye? Shriram Finance, for instance, is on a roll. Very, very strong numbers coming in, as also the charts look good. Your views on the NBFC sector and any particular stock that you like?
So 6 to 8 months down the line, we are going to have an event where India is going to be included in the bond index, and to my mind, one of the biggest beneficiaries of this is going to be the NBFC companies, as they can raise large cash at very competitive rates, uh, and they can be a competitor to the banks also in terms of costing. So, given this fact, we believe that Bajaj Finance, to my mind, is very well positioned to, take up, continue growing at high growth rates. Geo, of course, we like because, it has got this huge database that they have, which they have to just sit and monetize. They've also entered into very good transaction with SBI cards, so they can give a huge discount on products bought in geo stores through these cards, so that can also trigger Reliance, and eventually it's a win-win for all the companies in the Reliance uh, stables. So I will, at this point in time, if you see the differential between the large cap players and the small cap players has really caught up, and so the risk reward ratio today stands with us large cap players, and hence today I'll be recommending to you Bajaj Finance itself.
Okay, absolutely got that. And Mr. Polinchka, what are your thoughts on PSU banks? Because we, have seen a major correction, but now some of the banking stocks, they are coming back into the action, like PNB, Canara Bank. Even on Friday, if you see, PNB and Canara Bank were the top gainers, in the FNO segment. So, any top picks that you have from the PSU banking space that you would like to share?
Yeah. So, between banks, that is the private banks and the PSU banks, we continue to maintain a positive stand on PSU banks. And if you see the relief rally that happened, PSU banks were the major gainers. So there was a lot of aggressive selling that happened, and then the interest has come back very strongly. We believe that the valuation differential between the two state banks and the private banks is going to narrow over point time, because the banking business has got relatively commoditized, and the risk asset quality of the PSU banks along with return ratios are sharply higher and very much in comparison with those of the private sector banks.
And we've seen a very sharp rally coming into the likes of PNB and Canara Bank on Friday's trade. In fact, these two were the top gainers. PNB at 73.45 was up about 4.6%. Canara Bank at 383, surging about 6% higher. So the NBFC and the PSU banking space are likely to be showing very strong supports coming in the days ahead. You've mentioned the auto space, NBFC, and the auto ancillary space, Vineet. Anything that the PSU basket throws up as attractive picks when it comes to valuation and recent price corrections, apart from the banking sector, Vineet?
So I think BAIL has corrected very sharply, and BAIL is one stock that is available at very reasonable valuations. It has got all growth levers, all the boxes are ticked off in terms of defense, railways, capital goods, green energy, as well as a lot of service income kicking in, which is annuity based. Plus the fact that India is entering into a rapid cycle of electricity consumption, where the base load is getting kind of coming in short supply, and that is going to mean that more thermal business coming in, and already BAIL's order book is sticking quite nicely there, and we believe that all these sectors, the upcoming sectors, and its bread and butter business are well positioned to benefit from this surge. So given the BAIL, we saw the price move to 140 plus levels. Today it is down 100, 120, and although BAIL is a slow mover, once it catches the steam, the stock really moves. So, you should accumulate the stock. Don't get disappointed if it does not move in the initial days. But when the bull market returns, I think BAIL is one of the stocks which is going to move faster than the market.
Okay. At 132 rupees, the stock is marginally off from its all-time high of about 146. Remember, this is the split price that we are seeing. Enough and more momentum has always been discussed in the defense PSU. And of course, one of the leading candidates for a long-term appreciation in prices is BEL. Vineet, there is a slew of earnings slated today on frontline counters, DLF, TVS Motor, Marico, UPL, to name a few in the large cap space. Anything that you have on your radar?
I think we'll be watching Marico with great interest, because they've really consolidated their position in the hair oil business, and the other verticals are also firing quite nicely. So we think that if there is a small turnaround here, this is one stock which is not participate too much in the rally, could be a surprise candidate.
Okay. And with that, we'll start paying attention to pre-open trades. There's a nice 100-point uptick on Nifty, but this is going to settle down. This is not how rates are likely to move. Let me just share with you some prices. Remember, these are the prices that will settle down further. These are initial trades after a 2-day gap, and they will obviously change for the worse or the better. HDFC Bank is 1.8% higher, 1495. Reliance is 1.38% higher, 2297. Infosys at 1409 is ticking 2% higher. And we see strong moves coming in ICICI Bank and Axis Bank as well. These are the stocks that are in the green. If this number remains on the Nifty, I'd be very, very pleasantly surprised. But I'm sure these will readjust a lot lower. It's Lever, which is opening 1.7% lower at 22 at 2440. A mild downtick of about 1.2% on Larsen and Toubro 2900. We see prices now readjusting sensibly. The Nifty is still up 90, although that's not in sync with the negative tick on Gift Nifty. But 19135 is what happily we all will take. Let's see how these trades settle. Within the PSU team, I'd like to watch. Okay, KIOCL. Again, this is very, very high beta, low float. Let's ignore this counter. I'd like to watch what's happening in the FNO space minus the index heavyweights. Let's just spend some time there. Okay, IDFC is up 5%, 127. I see strong ticks coming on Maruti. Again, record high. And remember, Vineet has pointed this stock out. 10,810. Yes, the price ticket is fairly high, but very, very high momentum, very high beta counter as far as prices are concerned. Okay, we have a green tick on IDFC First Bank, 88 rupees, 2.2% higher. Let's look at the most active counters. Anything that catches my fancy? No, not really. M&M Finance is opening 5.5% lower. These rates will settle sensibly. The Nifty is now flat completely, 13 points higher at 19,060. Now, this is a sensible price tick that we are seeing, and this is how the stocks are now stacked up. Reliance, 0.5% higher, 2278. I want to see what HDFC Bank is saying. Flat, 1469. And Infosys at 1385 is up 0.34%. This is how the moves are structured. Akshay Bhagwat, Senior Vice President of Derivative Research at JM Financial Services, joined us. Good morning, Akshay. Welcome to Market Today on Business Today Television. Your view on the Nifty first, and any two stocks that you're looking on the charts which might present a good short-term opportunity on the long or the short side.
Good morning, Shailji. Firstly, the view on the Nifty. A good start for the November series. If you look at the open interest build-up too, there was slight short covering on the very first day. So a good start, but what I would be looking forward to is how Nifty would react once it tests the 19,200 mark. So as of now, I'm concluding this as a bump-up rally in the Nifty because last week we saw a major technical breakdown at the 19,200 to 250 zone. So we are still not out of the woods. The whole idea is the market is trying to create a support base at the crucial technical support juncture of 18,800. Even if you look at the monthly placement in the option segment, significant open interest buildup is at the 19,000 strike in puts, which is totally higher over the number of open interest contracts over calls at the 19,500 strike. So the weekly contracts, the monthly contracts all have significant support base set up at the level of 19,000. So roughly, I may give importance to the level of 18,800. It will take some time for the Nifty to settle and create a base at 1800, but I'm pretty sure that a support base is in place at 18,800, and the market will soon make a recovery attempt to get past the 90. Is where I would look at how the market reacts. So for the time being, 18,800, 19,200 is the zone Nifty may trade in. It will be choppy, it will be volatile, but a base is information is what I would conclude for the Nifty index. Now, the couple of stocks which I have on my radar for trading is one is Dabur from the FMCG pack. Now, Dabur has seen a very strong bounce on the first day of the November series. A possible short covering candidate as the open interest unwinding was seen in this counter. This stock has been an underperformer in the last couple of months and is showing a possible double bottom formation at 510 levels. So buy Dabur for a target of around 545 to 550 with a stop loss below 510. That's the first trade I would recommend. And the second trade is ONGC, which has seen a significant support recovery from the support zones 180 backed by derivative numbers. This is again in an uptrend. It is just a consolidation it has been in. So once 80 support base is intact, I'll be targeting around 196 on the upside as a trading bet. Keep a stop below 180 and buy ONGC. So these are my two stock picks from a trading perspective.
Okay, absolutely. So Dabur and ONGC, keep an eye out on these two stocks. But let's take a quick technical check on Reliance, also Akshay, Reliance Industries. Good set of numbers coming in from the company. So what do the technical charts suggest for this counter?
Good morning, Tanya.
Yeah, good morning.
Yeah, if you look at the entire technical structure of Reliance, Reliance has recovered from a very important Fibonacci number of 61.8%. This 61.8% I have calculated from the entire low point of Reliance, which we saw somewhere way back in the month of March 2023 at 2000 levels, to the recent swing high of 2630. So 61.8% Fibonacci recovery is a very important technical development. So my sense is a base is in formation for Reliance. The recovery has been seen. The numbers are good on the derivative segment, and plus now you have positive set of numbers which are out for Reliance. So even if the stock were to react negatively for the time being, if you say, because nowadays if you look at the last few results, normally the results have been sold into, I would still keep a buy view on Reliance. So whatever the reaction is, my target for Reliance is around 2360 on the upside for the month of November. Yes, 2300 is a trading stopover, so that's a temporary stopover I foresee in Reliance, but buy for bigger targets. This might be in a reversal in the making because it's been an underperformer in the last couple of months. So a positive view on Reliance, 2240 is a support base and 2360 is where Reliance should be heading for in the month of November.
That's a view coming on India's most profitable company that announced a sterling set of numbers post-market close on Friday. Let's get Vineet back in this conversation. Vineet, the correction on the Nifty from 20,200 levels to 18,800 in a span of 1.5 months. This obviously is an opportunity for long-term investors who are not bothered much about the daily ongoings of the market. It's corrected fairly sharply, 1,400 points. Apart from individual stocks, would good funds, good ETFs at current levels make sense for people who want to create wealth in the longer term?
See, let's look at data very objectively. So if you see the contribution of the Nifty 50 in the total market cap of the company, we are at about 40%. This hovers between 40 and 50. So we are on the lower side of the band. And typically over the last few years, we have seen there are 3 occasions when around these levels, the churn starts coming back into the large caps and they start outperforming the market. And with good numbers coming in the large caps and with, suppressed performance over the last few months, I think we are going to get into a very, very good upswing in large caps whenever the market turns around.
Fair point. So a lot of sensible people who really create superb long-term wealth are at least buying into the Nifty and the Bank Nifty ETFs in piecemeal fashion, and that creates a base at about 1,800, 1,900 as far as the Nifty is concerned. And obviously, Nifty being a compounder, over time you will see it reclaim 20,200. That's a surety that I can tell you. And at 1,800, 18,800, 900, 19,000. These are good levels to start SIPs, which are either dormant or you can also add a fresh SIP. Pre-open prices have settled. Nifty is flat 19,053. As long as it's a green tick, that's a good thing to have. And let's look at the FNO stocks. where we have gains apart from the index stocks. I have IDFC 1.6% higher, 122.75. We'll also take a look at Cipla and RECL. These are earnings candidates, and of course, BEL. Let's get Akshay's view on BEL. A very nice swing trade in the making as far as charts are concerned at about 132, 133.50. Akshay, your view on BEL for the short term?
Yes, Shelji, I concur with your view. A nice swing trade in the making. 128 support has been set in BEL, and possibly, it will try to get past its immediate resistance, which stands around 134. Few trading sessions back, we have seen a technical breakdown from these particular levels. So the momentum will pick up above 135. Right now, it will try to create a support base somewhere from 128 to 134. So time being, it might stay in this range, but the broader thought is 140 is where BEL should be heading for. So continue to hold if you have a buy position in BEL, and if you want to create a fresh long, ideally 130, 31 would be a good entry level with a stop loss below 125 for a target of 140.
Yeah, absolutely. And I want to see what Union Bank of India is doing in the pre-open trade, because the company, the bank posted 90% jump in its net standalone profit at 3,511 odd crore rupees, and it reported 1,847 odd crore rupees profit in the September quarter of FY23. So the stock is up 1.4% on the back of stellar set of numbers. I want to come to you first, Mr. Bolinchka, for Union Bank of India. The stock, if you look at the stock performance also, it's up around 38% in the past 6 months. So what should be the strategy now after the results?
So, very, very optimistic on the numbers of Union Bank, but had they not had a very large exposure to Sterlite Group, I would have been absolutely gung-ho, hammer and tongs going after the stock. So the only disclaimer out here is that they have a large exposure to the Vedanta Group, and while it is not reflected in their numbers, it will continue to be a slight cause of concern when we go and look at the valuations in the future. Of course, Vedanta is restructuring and they're looking at creating opportunities to raise more more funds to de-risk themselves. But till the time that we don't hear some strong indications of what is happening, I think this asset quality deterioration will always be an overhang. But I think very, very good numbers. And if you have the appetite to take on these stocks, one can definitely buy, albeit with this clause that its NPS can also start picking up. Another thing also that we need, as investors need to keep into consideration is that despite the fact that the best performances of the banks are coming in, the NPA cycle has started picking up. So, a little bit of turbulence around that factor, whether these will go back to the previous numbers, because the confidence in PSU banks is still not there in the street. So this is the only thing that is holding me back from going hammer and tongs after Union Bank.
Okay, absolutely. And, auto stocks, that segment will be in focus ahead of, monthly sales data. And Akshay, if we talk about Maruti Suzuki, we were expecting good set of numbers, but 13% margin, that is something, well beyond expectations as well. So what are your thoughts on Maruti Suzuki post its second quarter numbers?
Maruti's, if you look at the open interest positioning in the derivative space, there is open interest positioning in far off strikes. That's 10,000 strike in put and 11,000 strike in calls. This just makes me believe that Maruti probably will stay in a broader range of roughly around 10,200 on the lower end and maybe 10,900 on the upper end. This is because my sense is that both these calls and puts have been sold as a strategy to play on the options depreciation theme. Even if you look look at the charts, Maruti is making a newer high on the short-term space, but unfortunately, it is not able to sustain onto those gains which it makes. So a choppy session is where my expectation is Maruti would trade in. If you want to take a re-entry or a directional bet in Maruti, 10,500 is a good level to re-enter on the buy side. So wait for these levels. You might get a small profit booking round in Maruti, which might see a drag in the stock till 10,450, 10,500. Participate there for as trading targets of around 10,850 on the upside.
Right. We have the market initial trades in front of us. The Nifty is in the red, marginally so, 20 points lower, 19,024. The bulls and the bears will fight it out at 19,000 level on the index. Similarly, tepid start on Bank Nifty, down about 141 at 42,636. The IT index and the Nifty 500 index have opened marginally weaker. Let's look at the index heavyweights. Reliance, the first stock to watch. 1% higher, post a stunning set of numbers at 2286. Remember, this is a 6-month low on the counter. Let's look at Infosys, down about a percent, 1368. Let's look at HDFC Bank, 0.5% lower, 1462. Kotak and ICICI Bank are also in the red, as also is Axis Bank, falling between 0.5% and 4.8% lower. Let's look at stocks that are on the green tick as far as index heavyweights are concerned. Apart from Reliance, there is none, ladies and gentlemen. The 10 stocks are sort of in mild negative territory, and the losses on the Nifty are now accelerating, down about 40 at 19,000. So this is one level that will be watched very keenly by the bulls as well as bears. F&O stocks, apart from index heavyweights, Indian hotels, 2% higher, 382.05. This is how the stocks are structured. If you look at stocks which have the highest volume, amongst the first 20, there are only 3 gainers. BHEL 1.5% higher, 119.45. Mahanagar Gas Limited 6% higher, 1043, and Reliance 0.7% higher, 2283. So that's how the overall theme is. Index heavyweights, only Reliance is up in the first 10. In the first 20 stocks in F&O, only 3 are in the green. So bears are on the front foot as far as Dalal Street is concerned. Let's look at the NSE 500 theme, and then we'll hit Akshay with a stock. Okay. CDSL 1404, 5% higher. Remember, this is a very, very high beta stock. We have Union Bank, which was picked out by Tanya, 2.6% higher at about 102.50. Lemon Tree is up in sympathy with Indian Hotels, 1.1% higher, 113. And we have stocks like, let's just split it this way. Yes. Amongst the high beta, you have Suzlon, 0.3% higher, 32.25. You have Steel Authority at 83.90 and CESE at about 85, 4.2% higher. Nothing much is happening in initial trades. Let's see how it moves. As far as the Nifty is concerned, every single stock that is sticking on my charts is at day's low. Aisha, SBI, M&M at about 1508, 561 and 3404 respectively are moving lower. Earnings boy UPL at about 558. So there's not much of a strength coming in. And the day's pivot on the Nifty at about 19,600 is now with the bears. Akshay, coming to you. We've had first 4 or 5 minutes of trade. Any view on the Nifty, what you want to do? And any stock that catches your fancy?
The start has been a pretty soft start for the Nifty index, and probably the sense is that it's going to be choppy, as I said in my opening remarks, that this zone from 18,800 to 19,200, this is going to be a non-directional zone and a pretty challenging zone as far as trading goes. So if you're trading from intraday perspective, I think 18,950, 18,970 is the point where you might get some sort of intraday support in the Nifty. So slight dips should again attract buying as far as day trading goes. So I'll be positioned on the buy side still if I'm trading in Nifty, and I will keep a target of today's high roughly around 19080 to 19,100. So be a buyer, but wait for slight dips in the Nifty. That's the strategy I would take. And looking at the opening ticks in Nifty, yes, there is some bit of a capitulation as I see in majority of the stocks. But I think Reliance will be the savior for the day. Let's buy strength. So let's buy Reliance, although it is up 1%. If you look at the broader charts, it's been a non-performer till last couple of months. So this is poised for a strong comeback. And as I see, it has managed to cross the 2300 mark with good force. A lot of unwinding in 23,000 calls. So 2330, 2340 is where I will be targeting Reliance. And the stop loss would be days low in case you want a stop from a risk management perspective.
That's a good call coming in 2305. And I see a lot of block deals happening on Reliance. I'll just share some numbers: 16,600, 8,500, 10,734, and 14,000 shares, 17,000 shares, 25,000 shares, all individual block deals of anywhere between 2 and 5 crores happening on Reliance charts. Very nice internal short covering happening on 2280, 2260, 2240 calls on Reliance, and a nice pick. What is 2300 in terms of a call? At 4870, it's already up $10. Let's see how the overall structure of this one is. So we'll look, or let's just say we'll keep an eye out on the 2300 call of Reliance Industries at about 53. It's about fairly strongly up about 11, 12 rupees. So just keep an eye. Any tip there is an opportunity to move in. Nothing much is happening on the counter as far as the other stocks are concerned. It's almost a sea of red wherever I look at it. So that's how the markets have opened. 26 points down on the Nifty 19,021. We'll wait for the first 15 minutes of the chart to come in. And let's at the moment look at the wider market. Advanced decline ratio on the national stock exchange is now favoring the bears. 650 stocks in the green, 1200 stocks in the red. So 1:2 for you. The NSE 500, which is the mainstay index for as far as markets are concerned, out of 500 shares, only 99 are in the green. So 1:4 advanced decline ratio favoring bears. Within the Nifty, of the 50 stocks, only 15 are in the green. 35 are showing a red tick. So that's how the structure is at the moment, favoring bills at the initial trade in the first 1 or 2 minutes of trade. Cipla, post earnings, Cipla is showing pretty good traction. Coming to you first, Akshay, on Cipla, what are the charts telling you? I see 1200 on the screen and 1208 as far as cash is concerned. Your view on Cipla, and then we'll throw the same question to Vineet as well.
Cipla has seen a good support formation at the 1150 levels. It's a bottom which Cipla is time and again seeing good demand, and the immediate resistance is at 1225. So Cipla's technical positioning is positive. The derivatives data too is supportive of this. So 1225 is where immediately it will be heading for. They're just around 15-20 points away from where we are. That's just a stopover for Cipla, but I foresee some bigger upsides going ahead for the month of November. So 1270 is where you should target Cipla if you are a buyer at the current juncture. Keep a slightly bigger stop loss, probably 1160 is where you can keep a stop on Cipla. My sense is that this breakout above 1225 is coming soon, and 1260 is the target which you should be aiming for if you are a buyer in Cipla. So positive view on Cipla, and continue to hold, or even I would give a fresh buy recommendation with a stop loss below 1160.
Absolutely got that. And what about you, Mr. Bolinchka? What are your thoughts on Cipla? Stellar set of numbers.
Yes, definitely very, very good numbers, and we're quite optimistic on the road ahead. Additionally, we believe that Cipla can be a very, very good takeover candidate. So there would be a lot of action around this stock in the days to come, and hence we would expect investors to hold on to the share.
Okay, absolutely. And on that note, thank you so much, Mr. Bolinchka, for taking the time out and being with us here on BTTV. Coming to you, Akshay, now, there are some stocks that will be in focus ahead of their numbers today, and we have Adani Green, we have DLF, TVS Motor, and Marico that will be in focus ahead of their second quarter results. So, any stocks that you like from this list, and how should one really approach ahead of their numbers?
Firstly, if I were to look at the chart of Marico, well, the broader chart structure signals more of a neutral outlook as of now. Probably the immediate reaction, as I go by the open interest positioning in the derivative space, you might have some bit of a temporary weakness in Marico. So 533 is where Marico trades at. You might see a support formation or a slight drag down till around 520-25 levels. So not very keen on buying Marico as it stands right now. Wait for dips around 520-25 to re-enter Marico as a buy trade. Slight correction is possible after the results. And I believe the second stock you mentioned was DLF. So DLF has a very positive chart structure here. A good strong support zone as it stands at the level of 515 to 520. Even in the derivative space, you have strong positioning in put writing at the levels of 520. So that's a positive view here in DLF. But if you were to see the immediate reactions post results, yes, it will hold the 515, 520 mark. But I do not see a one-way rally post results. It will probably, be in this range, have a slight range bound or a neutral impact. So wait for slight dips. 520 is a good re-entry level if in case you get them on profit booking or on a soft trade in DLF post results. The view is positive, but as to take it for the event for a blowaway move, I'm not very comfortable. So buy on dips at DLF. 520-25 is the range you enter in for a target of 545 to 560.
Okay. Tanya, I think it's already 9:26, so the first 10 odd minutes of trade is with us. The Nifty is battling 19,000 between the bulls and the bears. Let's look at how the option statistics are placed as far as the chain is concerned on the Nifty. So at about 19,000, the call is trading at about 113 rupees, down about 37, and the put is at 87.50, up about 17.50. This is the in the money option trade that I'm talking about. Coming to you, Akshay, uh, given that we've seen a very sharp rally on the Nifty on Friday, what would be your how should I say, option strategy, given the first 10 minutes of trade? We are still at the pivot point of 19,060, and overall, the market structure looks weak. Any option trade that you have in mind as far as the Nifty is concerned?
I would be looking to re-enter Nifty on the buy side, slightly on dips. So 18,950 to 18,970 is what gives me comfort to take a buy trade in Nifty. So I'll wait for those levels to get initiated. Once those levels are initiated, I will look for buying the 19,000 call. So that will be on my radar for the 2nd November expiry. Roughly trades at 113. So in case you expect a dip, 90 to 95 is probably where you might get those levels. So be a buyer slightly on dips. If you want to position yourself in Nifty for the coming week or for the next 10 days, then a bull call spread as a strategy would be the best way to go about. Probably for the 9th November, that's the next weekly expiry. What best you can do is you can go for buying a 19,000 call for the 9th November, sell a 19,300 call against it, and you can comfortably wait out in this strategy with a stop loss below 18,800. Your losses, in case it is there is any volatility or risk, will be confined or will be in your control. If it goes up, you will have the best of both the worlds if it expires around 19,300. So I'm maintaining a positive view on Nifty. Just from a timing the trade, I will be more comfortable slightly on a dip of 40-50 rupees from the current level as it stands.
Okay, absolutely. And let's pull up Mahanagar Gas, MGL, for you. It's the top gainer from the FNO space. And let's see what the stock is doing. And let's take a quick technical check as well. There's a nice swing trade that's happening on the long side. Okay, 3% uptick there. 1018 is the level where we are at this point in time. What are your thoughts, and what do the charts suggest for Mahanagar Gas, Akshay?
Mahanagar Gas, as you rightly pointed out, a good swing trade in the making. 980 is a very strong support. Time and again, if you look at the charts, there is a good demand area at the 980, 990 level, a possible double bottom scenario in Mahanagar. It's in the range. 1140 is the upper end of the range. 980 is the lower end of the range. So from a risk reward payoff, yes, it is a good payoff if you take a buy trade around the 1,000 odd mark. Keep a stop loss below the support zone, which is at 980, and do not go for very big targets because this is going to be in a consolidation phase for long. The gains are not going to be immediate. It will take its own sweet time to get to 1075, 1080 because there has been a very strong sell-off. In case you look at the last 3-4 days action from 1120 to 1020, almost a major shave off in the gains has been seen in this just a single day's time frame. So the recovery process will be slow. Keep a target of 70 to 80, but give it some time with maybe 7 to 10 trading sessions for these targets to achieve.
Okay, let's look at the energy space that is with us. We've taken two views, one on Reliance Industries, and Akshay's pick for today was ONGC. Let's get the ONGC chart in front of us on the screen. At the moment, the stock is trading at 186.45, and there's been a nice block deal of about 74,400 shares. 185.90. Would you want to revisit this call, Akshay? This was your second pick for today's trade on the long side.
Absolutely, Shailji. I'm very positive on the oil and gas space, and here ONGC's technical setup just makes me believe that 195 plus should be the targets which you should be gunning for if you are a short-term trader. A very strong setup. 180 is the base it has formed, and the stock is just setting up for a major move. The momentum for this move will actually pick up once it crosses 188. So right now we are in the accumulation zone. So buy the stock, keep 195 as your target. Probably a week's time, you will soon see these targets being visited in ONGC.
Okay. Now the fall in the market is deepening a bit. We are at 932. So the first 15-minute candle on the Nifty has been formed and it's not looking good. The day's high is 19,080. And at the moment at 18,983, you've seen a 100-point correction on the Nifty. Intraday, that's what I'm talking about. The first support level is at about 18,955, 950. So that is what we have to see. Remember, the advanced decline ratio on the Nifty 50 shares is 1 is to 15 shares in the green, 35 in the red. And within the index heavyweight space, all 10 shares apart from Reliance Industries are in the red. A lot of technical charts open in front of me. I get a sell signal on the Nifty. Let's see how it pans out. But for the moment, there is a distinct weakness creeping into the main index as such. None of the stocks, as far as index heavyweights, apart from RIL, are there, are showing any kind of traction on the long side. And Akshay had very rightly pointed out that Reliance will be used to manage the Nifty and prevent a very sharp fall, while all other sales will be pressed on other index heavyweights. To you, Akshay, what appears to be the weakest stock chart on the Nifty? Where do you see a lot of pain gathering momentum on the short side?
Well, one chart which clearly comes to my mind is United Phosphorus Limited, that's UPL. If
Yes.
you look at the chart structure of UPL, this stock held its ground since the last couple of months, but unfortunately, in the last few trading sessions, there has been serious long liquidation. The stock has broken a very important technical support zone of around 580 to 600 mark. So the setup makes it a bearish setup from a trading perspective. On the lower end, 520 or 515 is the levels which the stock can visit soon in the month of November. Shorts are accumulating this, as I understand, going by the derivative setup. A lot of call writing bets at 600 level. So a tick off on most of the parameters for shorting UPL. Short UPL, if you are an FNO trader, you can consider target still 515 on the downside. If you are holding UPL from a trading perspective or for a medium term, I think it's better you let go of the stock once and try to re-enter it once you get around 500, 515. So a bearish setup, I would short UPL if I was looking for any shorting bets in this current market.
Absolutely, and let's pull up UPL also. This stock will be in focus today ahead of its second quarter earnings. 8 days of continuous downfall, Akshay, for this particular counter. If you see the 52-week high, that was 807, and now it's 557, the level where we are at this point in time. So, what do the technical charts now suggest for UPL?
Technically, as I said, it's a bearish setup. Any minor pullbacks also need to be sold into. So positioning, I'm looking at downside target still around 515 to 520. Even minor pullbacks on market volatility, 570 is a good level to short. I would be bearish till it trades below 590. So a bearish setup, and 515 is where you should be targeting. 515 is where you should be targeting on the short side in UPL.
Okay, let's explore some other stocks within the FNO space where you see the momentum as far as prices are concerned on the long side. The PCR will pull a chart of Canfin Homes in front of you. It's the third day of gains on this particular counter, and it's been a high beta space for a very long while. Canfin Homes coming in front of you at 745. What do you make of this chart, Akshay?
Canfin Homes, well, it's shown a strong recovery from its support zone. So it's more fitting on the trading parameters. 700, 720 is a good support for Canfin Homes. But, this trading bounce can at the best target near 790. So I'll be more interested from a trading perspective because broadly, the setup is more in a range. From the lower end of the range, it's showing a tendency of bounce. So consider buying Canfin, but from a trading perspective, 740, 35 are good entry levels. Keep a stop below 705 and target around 780 with a time horizon of around 10 trading sessions.
Okay, so that's the view coming in on Canfin Homes. There's some other stocks that I'd like to mention where you're seeing a very, very sharp dip coming in. Let's pull up SBI cards. In distinct pain, 735 in front of me. And when you look at the price chart, it's down about 8.4%. Intense weakness based on earnings, as also Mahindra and Mahindra Finance down 11%. So these are the two top losers within the FNO space. We are just marking the stock price in front of you. Even the open interest rise in SBI cards is somewhere like 18, 19%. So this selling that is coming in is at a very, very high volume, plus very strong built up of shorts. This is the kind of lows that you had seen in early February, early January 2023. And overall, this is the weakest since 2020 of August. There's a massive breakdown, Akshay, on SBI cards. What do you think is happening?
The technical setup clearly is weak in SBI cards. Massive shorts seen today. Long liquidation also is pulling the stock down. It's heading for its recent swing low, which we saw way back in the month of March and April 23. That's around 700 to 708. So that's the target area where these shorts should be covered up, or where this downside can see a temporary halt. So a bearish setup in SBI cards, 705 is the downside you can look at. So in case you are, you have a buy positions from trading, immediately square them off. In case you are interested on the short side, yes, you can consider shorting it with a stop loss about 760. Target would be around 700 to 705 on the downside.
M&M Financial Services Shell, I think we should pull up this stock as well. The company reported its numbers, and the profit was down 48% to 235 odd crore rupees. Revenue, however, jumped around 24%, and interest income that was up 9%. But if you see, Street is clearly not liking the numbers. Akshay, 249.6 is the level where we are at this point in time. 10% downtick there. What should be the strategy at this point in time?
Well, yes, clearly it's the results have not been taken well by the streets. There is long liquidation, as I see on the derivatives data. A lot of call writing interest picking up at high strikes, especially at 255 and 260. So I would say that at the current level where M&M Finance trades, there is a good chance it might head low to the lower end levels of around 242 to 245. Not much, but maybe 4 5 rupees still downside I can expect from the current levels. There is where you might get some sanity in the stock because it's already down 10%. So a negative setup for short-term trading, probably 5 7 rupees further down to go, and there one needs to review it as to how it plays out at 240 43 odd levels, because those are important levels for M&M Finance. So I would not recommend buying the stock as of now. Around 240, I would review it and see how it plays out there. So wait and watch is what I would recommend in M&M Finance as the current setup goes.
Seem to be ticking fairly actively in the green despite an overall weakness is BPCL. The chart will be in front of you. At the moment, at about 342, it has seen a block deal of about 38,000 shares. How does BPCL look to you in the charts, Akshay? Massive selling we've seen over the last 6 8 months, but some respite, at least for today.
Yes, some respite, yes, in the oil and gas space, BPCL taking the lead today. See, the charts are not that encouraging, but overall there has been a drag in the last couple of months from 390 to around 330. But it's not been a one-way sell-off, as I see. There are almost always some intermittent gains in this in between. So I think there is one more phase from the current level where the stock would stage a recovery attempt, possibly till 350. That's the recent swing high which we saw, 350.55. So it's more in a range. 330 is possibly the lower end of the range. 335 might be the upper end. 345 might be the upper end of the range as it stands right now. No trades which I see which might give you major blowaway returns as it currently trades. It's in a range situation. So let's give it a miss as it stands right now. In case it recovers above 350, that will interest me. So at this point, I will keep BPCL on wait and watch mode as it is in a range of around 325 to 345.
Okay, absolutely. And I think, Akshay, we should look at CDSL as well. Sharp uptick there, very strong volume, 23 lakh shares. That's the volume, and it's actually 1.3 times the volume if you compare it with the 5-day average as well. So 1390 is the level at this point in time. What should be the strategy?
Yes, very well identified. There is very strong momentum, very strong volume activity as it stands right now. And if you look at the broader structure of CDSL, there is a major resistance at 1450. But I feel it's just a matter of time that these resistance levels will be broken past, and this stock will make a reattempt for the 1600 levels. It'll take some time, maybe a couple of months to reach 1600, but I am very positive on CDSL. 1600 is what you should target for. As a short-term trader, 1300 to 1600 is the 1400 is the range where it trades in. So this is the accumulation zone. Start accumulating the stock. Support is at 1300, and above the resistance of 1450, you will have a very strong momentum uptick, which will soon see the stock revisiting the level of 1600, probably in 1.5 to 2 months' time.
Okay, and CDSL and Bombay Stock Exchange always move a locking step. We've seen a very sharp rise in Bombay Stock Exchange, and perhaps it's a catch-up trade as far as CDSL is concerned. Tanya mentioned volumes at about 23 lakh 67,000. It's 1.7 times the 5-day average. Meanwhile, there is fresh sell coming in the Nifty, 18,950 in front of me. It's down about 100 points, and it has also sort of temporarily broken the first support level of 18,957. Let's see how this moves on. Remember, yesterday's, which is Friday's low, the opening tick was somewhere like 18,925. Let's see whether that level is going to be tested or not. Why I mentioned this is because there was a gap up of about 80, 85 points on the Nifty on Friday, and that gap up was consolidated. The Nifty went on to close 190 points higher. So it's the test that is happening of the Nifty. Nifty's first opening tick on Friday. Let's see how this one moves in. That low was 18,942. That low was actually 18,925. Let's see whether that's tested or not. And that would mean that the 18,900 call on the options chart will become active. Let's just note down the price of that particular call for future use, and then we'll proceed forward. So the weekly Nifty 18,900 call for the expiry ending on 2nd November is at 135 rupees. It's already down 85 rupees. And let's look at the 60-minute chart on this one to check out the high and low. The high was about 1,015 somewhere on 19th October. And at the moment, the low is somewhere like, 1 second, just let me mark this low for you. This is something to note, okay? The low was somewhere like 133, 134 rupees. This is something that you need to look at. 18,900 call for the Nifty ending November 2nd. What else is sticking in the wheel? A very sharp move coming on City Union Bank. Let's look at this stock in front of you, at least market as far as trade is concerned. And 136.15 for you. A second day of gains. This is how we are looking at. Tanya.
Absolutely, Shail. And I think let's look at some of the gainers and losers from today's trading session. So Cipla, as you pointed out rightly, it is up to the tune of 2% and trading at 1199. BPCL post numbers. Reliance Industries post stellar set of numbers, 2295, that's the level on this counter. We have Tech Mahindra also and SBI Life. These are some of the gainers for you from today's trading session. And if you look at the top losers on the flip side, we have Tata Motors. That's not supporting at the markets at this point in time. It is down to the tune of 3%. Trading at 623 level. Remember, we have Tata Motors numbers this week, so keep an eye out on this particular stock. M&M from the auto space, this is also down 2.5%. 1472 is the level. Shell, I think auto space, that this space will be in focus, ahead of monthly sales data and ahead of some important earnings. So I want to understand from you that what should be the right approach if we talk about auto space.
Tanya, there are three winners here. I'll name each one of them in the three segments that we track. Bajaj Auto and TVS Motors, as far as two-wheelers are concerned. Both these stocks have come up with a very, very sharp rally in the month of October, and they are doing phenomenally well on the charts. Any dip here make both of them a very sensible buy over the longer term. Maruti, it's going to be a very, very nice second half for this particular company, and at about 10,800, it's already at a fresh record high. And of course, Tata Motors and Mahindra towards the commercial space. The kind of bullish moves that we are seeing on these charts is phenomenal. And any dip which is sensible in terms of a 5-7% dip from the all-time high presents an opportunity for new players to get in. Please also get in another advice from a financial advisor should you want to look at these stocks for the longer term. But Tanya, a phenomenal move likely on all these 4 or 5 stocks and driven mainly by volume growth as well as price action, as well as newer and better models being launched. And like I say, a huge waiting list for cars, commercial vehicles, trucks, two-wheelers across India. Tanya.
Okay, absolutely. And also, let's talk about some of the sectors, Shell, because I think, investors need to be cautious at this point in time. Markets are volatile. So, any sectors that one should avoid, especially at this point in time?
Tanya, much will depend upon how crude oil and gold trade, given this assault that's happening on the ground level between Israel and Gaza. In complete honesty, it is best, trust me, to do one extra SIP this month, given that we are at 19,000 levels. And for those people who believe that Nifty is a compounding instrument, it was available at 20,200 a month and a half below behind us, especially on 15th of September. It was available at 20,200. It is now at 19,000. This 1,200 point dip needs to be arrested in your favor by doing one extra SIP in a good wealth builder fund or in a simple Nifty ETF. That's the way you make supernormal profit over the medium long term. And this fall should be taken advantage. Any fall beyond 18,800, 18,500 should be encapsulated and arrested in your favor by a simple extra SIP in the fund that you invest in. And if you don't, this is a golden opportunity, Tanya, to get into a fabulous market at a price point which is relatively attractive from what it was about 2.5 months ago. Tanya.
Okay, absolutely. And lastly, Shell, experts have been saying that Nifty ETF, that is a better option, especially at this point in time, especially in the markets where we are in. So, what are your thoughts when it comes to Nifty ETF?
So, Tanya, I normally don't say this out aloud. Yesterday, which was Friday and Thursday, I did buy it for my own personal consumption. So, and this is, of course, for the long term. There are no trading instruments as far as ETFs are concerned. So, that is what I have done in my personal account. I rarely share these trades, but to my understanding, a 6% correction on the Nifty provides an opportunity for really long term shareholders and wealth creators to do one extra SIP. So, the SBI ETF for Nifty 50 index, which is, by the way, the largest fund that we have in India, which has a corpus of something like 1,40,000 crores, where a lot of employee provident fund money comes in, is the best bet, according to me. Again, like I say, please take a view from a qualified financial advisor. But that's how at least I am adding value to my portfolio in terms of creating short term wealth. And I'll tell you what the price is. Just give me a moment. Uh, the last I think was 90, 197. Just a moment, please. Yes, 197, 198. The most recent high that we've seen is 216. So the SBI Nifty 50 ETF, India's largest equity fund, is what I have added, and you can do the same with some sensible advice coming in from a financial and a mutual fund advisor. Tanya.
Okay, absolutely. And I think, Shell, I would call it a bonus advice for all our viewers who have joined in. So, on that wonderful note, thank you so much for sharing, these excellent points with us, valuable insights as well. Thank you so much for being with us here on BTTV. So, with that, it's a wrap up, but you don't have to go anywhere. There's lots that's coming up for you. So, stay tuned and many thanks for watching.
As the date of the inauguration of the Grand Ram Temple in Ayodhya has been announced, now Ayodhya is preparing itself in all terms so that the people who will be coming to Ayodhya will get the accommodation. It will also give a boost to the economy of Ayodhya. I'm here right now at one of the hotels here at the highway of Ayodhya, and which is now preparing itself for the big day, because the number of guests have increased now. As far as the rates are concerned, that has also gone up to 4 times the normal rate which was there. Now also it is very important is that the hotels, the resorts, the restaurants, the new